There's almost no hiding it anymore. The major stock markets around the world are approaching all-time high prices again. As investors, as I believe you are here watching this channel, you're interested in making money from the market. Although there's a lot of hurt happening around the world, especially at the lower end of the socioeconomic scale, we can't deny the facts that are in the charts and the data, which is leading prices to new higher levels. In the case of the Dow Jones, we're 7% away from a new all-time high. The UK market is within 1% of a new all-time high. The Aussie market is fast approaching a new all-time high again. How is this possible, and how can we forecast the next 12 months in these major stock markets around the world? In today's video, we're going to look at a massive trifecta of signals coming together, which would be absolutely painful for you to bet against these. This is for the average investor and the smart money as well. And as we'll see from today's data, it doesn't look like the smart money is going to get it wrong again in 2023. They're usually on the right side of the market, and that's what we're going to look at in today's video, how we can get ahead of the trend before the major news outlets, the major crypto influencers, financial influencers out there start to flip from recession, depression, bad times ahead in 2023, and they start to flip into the more positive side of the market, and probably a little too late. Now, this isn't the first video that we've put together on the channel about the macro economy. This, of course, is your home of the macro cycle. So make sure you do subscribe, like, all those things down below. You know the drill. And of course, I'll leave a link to these videos at the end of this video here. We've discussed many major macro signals here, going all the way back to the S&P. We also have the major fund managers reports where they are heavily underweight in the stock market, and of course timing Bitcoin bottoms. You heard me right, using different signals on the timing aspect, the price aspect, and of course market sentiment. So without further ado, let's crack on with today's video, looking at the major trifecta of signals here. Now, the trifecta of signals is put together by Jeff Hirsch here, and I'll run you through them in terms of what exactly they are. This goes back to 1950, so over 70 years of data. We need three things to come together at the beginning of the year, and this calls the market nearly 90% of the time, nearly 9 times out of 10, as to what will happen at the end of this year. Is it going to be a positive year? As you've probably picked up from the channel as well, I've been doing this with Bitcoin through our monthly analysis videos. I've got a playlist for that on the channel. Of course, I'll leave a link to that at the end of the video as well, which helps us identify what we're looking out for at the end of that month, and of course the 12 months ahead. We've looked at that for November, December, and January as well, as I put that out at the beginning of the month here on the channel. So the three things that we're looking for here: Santa Claus rally, that's the SC rally, the FFD, first 5 days of the year, and then also this is the January barometer, I believe is what B is here. So basically, what is the price of the S&P at the end of January? So we just simply look at the data through here. If you've got a positive Santa Claus rally, and I believe this data is taken from the end of December into the first couple of days of January. Also, the first 5 days, that's pretty straightforward. And then, of course, the January reading is the January month up. What tends to happen 28 times out of 31 is that you'll get a positive year ahead. So the next 11 months, you can see the data right through these readings right here. Okay, so that's what it is here. And basically the average is about 12% up on the year. So think about where the market opened on the S&P at the beginning of January. And then in terms of an average, just look at where that is at the end of the year. So the market for the S&P opened at 38.53, 12% up from that, call it around 390 points. So nearly 400 points up from that 38.5. That is going to lead us 400 points, nearly around 4,300. So that's just on an average here, but it can go a lot higher than that, and of course be less. But overall, 9 times out of 10, we're getting a positive reading for the year. So the year is going to be up. That's pretty different to what the major economists, the mainstream economists, the mainstream media, and basically everyone else that seems to be in that smart camp is calling for a major depression in this year. Now, of course, we can always be wrong and maybe we get another down reading here, but it's pretty hard to start betting against these odds once we start to see a lot of these signals come in, not to mention the other dozen signals that we've talked about here on the channel extensively through these videos, which I know can be quite long, between 15 and 25 minutes, typically around that 17 or 19 minutes. And so rather than repeat those over again, as I've mentioned, I'll leave a link to it at the end of this video. Today's video, we're focusing on this particular data right here. The other thing we have to keep in mind for this particular year, and I know I've talked about it on the channel, is the pre-presidential election year. So next year in 2024 is an election year. This is the pre-presidential election year. Many times, 8 to 9 times out of 10, these years are also positive. Basically, the year before the election, the market heads up pretty heavily, very high, very fast as well. We've covered that on the channel. So in pre-presidential election years such as this, our first 5 days has a respectable record with 13 full years following its direction in the last 18 years. So basically 70% of the time as well, this works out. In terms of just election years, as we've looked at before, dating back to the 1920s, it's about very close to 9 times out of 10. When all 3 indicators were positive, the next 11 months have been up 87% of the time, with an average gain of 12.3%. And so as we covered on the chart here, if we're looking at an opening price for the month of January being at 3,850, then if we run this figure up approximately 12%, we're going to get a reading somewhere around the 38.20 level. This, of course, would take us above the monthly swing top, which is what this orange swing indicator is. You can find a link to this at the top of the video description. You know how to get that shill in for our Gann swing indicator. It's one of the best, well, it's my major indicator that I use for trading and investing, giving me indications of market trend changes for extreme pivotal points in the market, in particular, the monthly swing tops and bottoms, basically telling you that the trend is firmly changing with that macro environment. So that's the monthly indicator there. You can use it on any time frame, minutes, hourlies, dailies, for any sort of trading as well. Basically, that would take us above the monthly swing top and also the monthly swing top of August. So it'd really put us into a very positive and strong position for the market to then continue building on into 2024, 2025, 2026, as we lead into the peak of the next economic and real estate cycle, which is what we are anticipating here. And so far, nothing has changed our opinion of that cycle. Everything is working out to a T for this cycle to continue up later this decade before we do get a major collapse in the market. And if you're new to the 18.6 year cycle or to my channel, please do stick around, subscribe, like. We'll continue to talk about that as we lead into that peak. Now, as I've pointed out many times, second half of 2022 and first half of 2023 are going to be great buying opportunities once we look back on it coming into the following years, of course. The other thing that being above the 4,200 and reaching this target of approximately 4,300, just as I said, using the average here of 12%. It doesn't mean it has to be 12%. It's been a lot more and, of course, a lot less, but using the average, where that would sit us is also above the major 50% point as well, which is 41.55. So 41.55 is that key 50% level down from this top to the October low, potentially the cycle low here, and that would then swing us back into the positive side of the Gann retracement tool here. So that's our 50% halfway point of the range. Would also be above the bear market downtrend as well. So we're starting to line up a lot of positive factors here if we're to get above this level. And basically we have approximately 13 to 14 days left of January to see whether the month of January on the S&P is going to close in the positive. And of course, that close needs to be above, as we've pointed out here, the 38.53 level. Now, what happens if this is wrong? If January is negative? We need to look at both sides of the market so we can prepare. Of course, we are investors here and not some sort of crypto degens just hoping and praying for the best thing to come. We need to be prepared for both sides of the market. I know a lot of people just don't like that. They only want one side. You should be understanding that by now. You need to know what could happen on both sides of the market so you can prepare, just like you were out in a game of sports or at war. you prepare for both sides. It's very silly coming to a market and only preparing for one side in the case of just being up or just being down. So if January is negative, as it's shown up here in these 12 times, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, then you still end up with a positive reading as well. So this isn't the most critical thing for January to end in the positive. However, it does start to swing the odds further in favor of the year ending up. So there is a couple of times here where the last 11 months, meaning that 11 months of the year, the last 11 months of the year, going from February to December of the current year, 2 of these times have been negative and the other 10 times have been positive. And out of those 10 times, the average return is only 9.9%. So still a solid 10% up on the year, whereas the other reading here would be a 12.3%. So a couple of percent difference just doesn't lean itself to a higher close. That's quite convincing data on the S&P being up at the end of 2023. Should we get this next 14 days ending up positive for the January month? And I'll make a quick mention here to Jeff Hirsch, if you want to follow him on Twitter. Putting out some great data like this also goes a long way to helping you out with your macro picture. So where does it leave Bitcoin? Well, as we're recording, Bitcoin is currently within $20 of breaking its monthly swing top that was set back in November before the FTX scandal dumped the market. We've talked extensively about the market sentiment around this low of $15,400 or $15,500 in the fact that this was one of the most major events in crypto within a major bear market across all indices, yet the market sentiment was able to find a way to climb out of this low and nearly break above, at the time of this recording, the monthly swing top. As I've pointed out in previous videos, again, link to those will be at the end of this video, so stick around for that. Like and subscribe so you get this content in your newsfeed. The major swing top that I'm looking for here is around that 25K. We break this 25K, we are basically all bets off for a $10,000 Bitcoin. I would not be waiting around in the hopes of a 10K Bitcoin or in the hopes of some sort of black swan event which no one can predict to get that quick dump to the low. And even in that case, maybe we only have a dump back down to the 15 or the 16K range. Now we're talking about something in terms of a black swan event which may never occur and we can't prepare for that exactly. So let's stick with what we currently have on the chart. Within 20 bucks of this swing top, which means we'll start to swing or make another check in our bull market cycle analysis. We've looked at the day counts, they're all working out relatively well. And so this is basically, as I pointed out on Twitter, just another nail in that coffin. We've been through a major down year here. It's a very significant negative return for BTC for that year. And for the year, probably 60, 65%, but from the top, nearly 80%. So a couple of different readings there. What we're looking at here, thanks to Charts BTC, and thanks for the follow there, is which markets have been the best to be in. So we've looked at the macro cycle here that potentially a lot of the markets around the world, the indices are going to be up. We have put aside what is actually happening to the economy itself and how people are potentially finding it hard to make ends meet with rents, with other bills, with food, with energy costs. That is different to making money in the markets. What we're looking at now is where would be the best place to put our money if we do in fact see a major bull year or a major second stage of this bull cycle. Of course, we need to make some assumptions here. We're basically using the data to hopefully get in early enough to make those gains. We can always look back in hindsight and say, well, that was the best. That's typically what the news does. That's what major influencing outlets will do because they are appealing to the masses. But in this case, we need to try and get in earlier here and identify when that would be. Looking at that in terms of the macro cycle, we think this and now is particularly a good time. This sort of 12-month period, second half of 2022, first half of 2023 is probably going to be one of the best times. We'll have to see how that unfolds and look back on it. But if that is the case, then we've got to go put our money where our mouth is. And over the last 11, 12, 13 years, Bitcoin has, of course, been the outstanding winner here. We're just looking at Bitcoin at the bottom, and we're seeing the highest return and lowest return. So in any sort of down year, Bitcoin is not going to be one of the best returns. 2015 proved otherwise, so it's still a good year there. But as we can see, say for 2018, the cash was the best return there. Same deal for 2022, cash or commodities. And commodities, probably looking at things like the energies and potentially metals as well. But essentially, cash is going to be your place where you don't have to speculate trying to get that next big home run. So cash in those couple of years, the rest of the time, Bitcoin basically wins hands down unless it's in a major bear market year, like you could see in 2014, like you can see in 2018, like you can see in 2022. So we got 3 years up, 1 year down, 3 years up, 1 year down, 3 years up, 1 year down. And this is 65% because it's measuring 2022, not from the top, of course. And so if this is going to be a good year and we go with the best returning asset over the last 12 years, Bitcoin essentially wins hands down. So although I can't give you financial advice, the data is pointing to two particular things. One, potentially this is going to be a reasonably good year, the start of that next stage of the leg up. Potentially for the S&P, the Dow Jones, the cycle low was October of 2022, as we pointed out here on the channel, as I'll leave a link to those videos at the end of this one here, pointing out why that was potentially the low for the S&P cycle. The second thing is, where should we put our money? Without it being any sort of financial advice, just looking at the data over the last 12 or so years, of course, Bitcoin has had some of the highest returns. Of course, we could start to break that down, get into altcoins or ETH or anything like that, but we'll leave that for future videos and for our newsletter here. So our crypto and economic insider report. Go and check that out. Link is in the top of the video description, name and email there. You'll find that link right at the top here. And of course, with our Gann swing indicator. Thanks again, guys. I've appreciated all of those comments there from you guys explaining what you've learned, how you've found the value from the videos, and what I can do more of to help you out through this next bull stage of the cycle. So thanks once again. Like, subscribe, check out the videos popping up on your left-hand side. I'll see you from a new location tomorrow. Thanks once again. Until then, peace out.